All right, welcome back to Market Day Report. I am Scott Schulte, otherwise known as the Cow Guy. Thank you very much for tuning in. If you're just tuning in, if you've been with us all day, that was my job to make you stay, but it's been kind of a rough one, hasn't it? We've seen everything go from inflation to recession, and that's no bueno in my other language. All right, let's talk about corn. Let's see what that's doing right now. Corn has been a rough one here. 8.5 cents lower in that subcontract. 6.20 and a quarter is last. It's about 4 cents off the lows. That's the good news. Dees trying to hang on to that $6 level. 607 and a half is last. Look at the low. It was about 3 cents ago at 604 and a quarter. We're down 12 and a quarter in that contract. Let's see what's going on in soybeans. How about the beanies? This is not good. Turn your head and hold your nose. August is down 46 and 3/4 cents to 15.13 and 3/4. That's 4 cents off the lows. Look, we have been about 60 cents higher earlier. Wow. All right. We've got Novi beans off 60 cents as well. We've lost that 14 handle. 13.98 even is last there. So soybeans really take it on the chin after a bullish number last week. So what does that tell you? If we're not doing what we should be doing after the numbers that we get from the USDA, this means that it's got to be something else, and that is recession fears, right? We had one confirmed yesterday. We are technically in a recession in the United States. All right, September wheat in Chicago down 32 and a quarter cents to 8.51 and 3/4. December's off 32 cents to 8.68 and a half. Let's move on over to see what we've got going on in Kansas City. The Kansas City wheat is also going to be lower. September's off 37 and a half cents to 9.14 and a quarter. Dees is off 37 and a quarter cents to 9.23 and a half. Spring wheat, Minneapolis. I used to live there. Minneapolis is down 38 cents in that subcontract. 9.52 is last, 4 cents from the lows. Things trading weak here, folks. There's still recession fears all over the place. We've got December down 35 and a half cents to 9.67 and 3/4. And finally, we're going to take a look at cotton. Cotton's been taking it on the chin, but it's not as bad as it was. Dees is off 215 points to 96.69 as we try to claw back to that 97 level. Let's bring in Todd Horowitz. Todd Bubba Horowitz from Bubba Trading in Chicago. Todd, thanks for being on the phone here. What are your thoughts? I mean, look, I'm going to say one thing, and I'll give it over to you, and you've got all the floor. But we loved it when it was inflationary, and the inflationary trade was driving us higher. But now it's recessionary, and things are kind of melting down in front of us.
Or even worse yet, Scott, deflationary.
Wow.
This is pretty scary. Again, this is what happens when nobody does the right thing. When nobody does what they're supposed to be doing, that could be protecting all of this. And you're bringing in some, deflation. So, it looks like we're going to end up in stagflation, which is obviously the worst of everything, right? And, again, we're seeing some heavy pressure on prices right now after a reasonable report. Again, I still think that there's going to have to be a demand curve here, but we're in that time of the year where it's, we're really in the planting's over. We're now waiting. We're waiting for weather. We're waiting for all kinds of things. And I think, when it's all said and done, I think we'll be fine. However, we do have a lot of concerns. Recession, which we talked about, you and I have talked about it for 6 months that we were in a recession already. They're finally recognizing it, which is not a good situation.
Yeah, it's technically not one yet. It's not a full-blown one. We just had the Atlanta Fed came out and they downgraded second quarter GDP to minus 1%. Not minus 0.1%, but minus 1%. And I want to remind everybody that we saw the first quarter GDP come in at a minus 1.6%. Because when you have 2 quarters in a row that are negative growth, which means the economy's shrunk, that's called a recession. That's a technical definition. Well, we were expecting the first quarter growth, by the way, to be 1.1 to the positive. So we missed that one by 2.7%, Todd. That's pretty hefty. That's one big one. Number 2 is that we weren't raising interest rates in the first quarter yet. But we have been in the second quarter, and now we've got the Atlanta Fed coming out and saying it's going to be down 1%. Now, I hope that's all it is, because if we miss even lower than that, things could get kind of ugly, don't you think?
Well, I think it's kind of ugly now, and I think that it's going to get a lot uglier. This is, again, you can't hide from the damage that you have created, in these markets and in the economy. You can't hide from these high costs. You can't hide from the Federal Reserve, and I think Jerome Powell said last week that he doesn't care if there's a recession, what happens. He's going to get this inflation under control. You always have to ask yourself, at what cost are we trying to make all these things happen? And we're doing a lot of destruction that's going to be very challenging to come back from unless we open up our eyes and take care of business. And that really comes back down to oil, because oil would solve a lot of these problems. And for whatever reason, we don't want to get there.
It's almost like the Fed has said to the patient, hey, good news is you're not sick anymore. The bad news is you're dead. Right? I mean, that's what they've done to the economy and they're going to continue to. I mean, I've never in 36 years of being in this job, never seen the Federal Reserve hike interest rates into the teeth of an oncoming recession, but we're watching it right in front of our very eyes. All right, I really appreciate everything you said there, Todd. Great contact. We're going to go away. Stay right there. We're going to come back and talk livestock with Todd Horowitz after these messages. All right, welcome back to Market Day Report. I'm the Cow Guy, and that is a cheap segue into looking at these markets, especially the cattle. Why don't we move over there and see what's going on? I get a little bit of a pep in my step because these markets are higher, and it's a little bit more fun to be the delivery of better news instead of bad news. August live cattle up $2.05 to 134.65. Deese is up $1.02 to 145.90. We'll take it, right? We'll definitely take it. We've got a lower corn board, but not that much. This feeder cattle are trying to gain some, muster some strength here. Look at August is only up 85 cents though. I would like to see more, but we're already at pretty high levels at 174.45 is last. So I guess that's going to be part of the issue here. October's up $1.65 to 180 spot 32. And then we're going to get to the lean hogs and get back to Todd here. Lean hogs are higher, except for the deferreds way out in Feb. That's lower by 27 cents. But let's focus on the higher. That's August up 80 cents. 102.87, and we've got Oct right behind it up 52 cents to 89 spot 20. All right, let's get back to Todd Horowitz. Todd, thanks for staying in. What are your thoughts when it comes to some of these livestock markets? I find them pretty interesting myself.
I think they look okay, but I think they're, as I said the other day, Scott, I think they're pretty much fairly priced in these levels. I think there's danger to the downside, obviously. I mean, listen, if the recession is confirmed, people run out of money, they just can't buy it. But I think based on what we're looking at, you see cattle and hogs both kind of churning between a couple of ranges. Feeders are like 170 to 175. And those are nice prices. I mean, listen, when you look at where the all-time highs are and where we are now, not bad. And, same thing with cattle, with live cattle. And hogs are like that 105 to 110, 115, 110 level. And we're just kind of rotating around the mean. They look good. However, again, it's going to really come down to this recessionary time, and do we get this deflation that I'm afraid of, and stagflation, and all the other inflations that go along with this.
Right. It's like every word, it's got the inflation at the end of it, or we're not talking about. And I think we've got some definite worries. I guess really now the debate, Todd, is how deep and how long, right? I mean, really, that's good. We're done with whether we have one or not. And I really never understood how the talking heads were talking about we're going to have a recession by the end of next year. What are you looking at? I mean, I can tell by just standing on the ground around here that things are getting pretty tough for people. So I really appreciate you coming on, Todd. Great stuff on a Friday before a long weekend. Always appreciate your content and your efforts to do that. Really, really thank you very much. Todd Horowitz, he's in Chicago. We're in Nashville, and I'm going to throw this back over to Suzanne.